In this video, learn 7 reasons why you should never exceed your stop loss as a trader. Hi, I'm Mike Bellafiore, co-founder of S&B Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. In this video, we review one of our favorite trades, the big dog consolidation, in step-by-step detail, while providing critical feedback to help a senior trader reach that next level in his trading.
I did a playbook on INPX, the move that happened January 7th following a really big move, and after Shark came in and really brought this stock to our attention, which doesn't happen every day, and I thought was very interesting. Running through the background. Start off with a big picture. I keep it real short and sweet. All that really matters to me right now is we're in a very strong bull market. I don't want to overthink anything, no matter what you see news-wise, everything that's going on. The market just has been grinding higher for months now, and I want very much to not overthink it. Intraday fundamentals. INPX had moved from, everything is split adjusted, so I don't even know the actual numbers, but it was a less than $1 stock that went from approximately 2 to 3 cents up to about 60 cents in just a few days. The day prior to the trade, and why Shark brought it to our attention, is the middle of the day they announced a 1-for-45 reverse split so they could stay compliant with NASDAQ listing requirements. It was trading on very high volume. I think he said it traded 300 and some million shares the day before. And from a very brief and cursory fundamental analysis, it looked purely on hype. I couldn't find anything that could justify that kind of a move. The company has $5 million in revenues, no earnings.
So walk me through that.
Sure.
So thesis is stock's up too much.
Thesis is like no fundamental basis that I can justify at all. I read the press release and it said we're going to spend this much money buying this. It did not outlay or give me anything I could point to that would lead to earnings or any real change in the fundamentals. It was a hope and hype press release that I could see no substance at all. So, and I don't want to overplay it. I did, like my fundamental analysis on this was less than 5 minutes. This
covering the stock that you were looking out for?
No.
No one covers the stock overall?
5 million in revenues at all, nothing. And I really wonder about what those revenues are.
Meaning, you wonder if they're real?
If they're pertinent to their business.
Okay.
So, I don't think it's fraudulent. I just think it's, what's the right word? Lipstick on a pig?
Yeah, and so when you're looking through, so you think something's up too much, and you start to look through whether or not it's sustainable. Generally, what are some of the things that you want to know?
If it's a company that doesn't have earnings or particularly in this case revenues, a path to that. A product that's coming to the market. We spent a lot of time on biotech, there's a lot of clinical stage developmental biotech companies which don't have any revenues but have a molecule or a compound or some intellectual property that they own the rights to. I can't see anything that this company has that's proprietary that is exclusive at all. So, but yeah, a pathway to profitability or at least revenues. So, intraday fundamentals, again, given the 1-for-45 reverse split, I really don't have a lot of confidence in the integrity of these, but I put them in here anyway. Just checking the boxes, and it's worth keeping in mind.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
This chart is really interesting to me. This is $900 here. This is, again, on a split adjusted basis, and the stock had declined from about $900 down to $5 before the activity, and these are all the trades that we did, but it literally doesn't even show up. And this is September of 2018.
I'm still long.
So this is not over a long-term time frame.
I didn't buy the top. I bought 885. No, that would be discouraging to be long from there and holding
Yeah.
that.
This tells me that there's something going on here, and Shark did mention it. They consistently issue stock. So this is the short-term activity, and this is the very few day run up where it went again split adjusted, where it $2 down here, and we get up to about $28 right here. This is the day before where he was all active, and this is when they announced the 1 for 45 split. Stock just absolutely imploded. So in terms of naming the trade, I thought about a second day play, some things like that, but I went with trend because it was actively in a downtrend, and I was looking for intraday breakdowns and downtrends within a downtrend. So reading the tape, I don't have level 2 on my system up here, so that wasn't a big part of it. So I just, there was persistent selling over the day. So here's where we get into the details. And what I was really looking to do, I'm on the sim, so it doesn't cost me anything, and I'm really trying to experiment. But I'm trying to figure out how to really push size, how to get big and do it intelligently and in a manner that's very consistent with not losing a lot of money, but also my designated limits. I have a theoretical limit of $500 per trade. I don't want to lose more than $500 per trade, and that's what I used here. This is a consolidation area of about 725, and I used a stop order to enter at the open, that was triggered at $7. So I was short 300 shares at $7 at 9:30, and this is about 9:31. I'm in the hole. I didn't let, again, the sim factored into my decisions here. I didn't let that phase me. I really wanted to see how this was going to play out. This happened so fast that I literally didn't have a chance to respond. It just went straight up and then straight back down in about 4 minutes. So I went way past my risk limit, but I was back here with down $3 only a couple minutes later, and just didn't have time to respond. I did not have a automated stop in. I was only using a mental stop at this point, just because of some of the volatility. This also influenced my decision not to enter the trade here. I did recognize this at the time. It moved up. I was down.
All right. So I have to stop you there.
Absolutely.
I think I have to stop you there.
Yes.
You work at a prop firm, and you will meet with your floor manager. Your floor manager will go over your maximum intraday loss. The firm is giving you license to lose that amount intraday. The firm is not giving you license to lose $1 more than that. Losing one more dollar, losing $1 more than that is a breach of trust. It's irresponsible. It is, at a hedge fund, they may even treat it more drastically. It is a fireable offense on the spot, period, full stop. And the reason for that is you're a custodian of the firm's money. And the firm is telling you you can lose $1,000 a day. It's permissioned you to lose that. It has not permissioned you to lose $1,001. That's number one. I think people look at this as this is a risk issue or a risk management issue. It's actually an ethical issue for everybody here. You ethically do not have the right. The firm has not permissioned you to do anything more than trade within its guardrails. So when you're in a position, you need to be thinking about all the things, and this is crazy. You need to be thinking about all the crazy things that could happen so you do not lose the trust of the firm. And you can't get that wrong. All right? And then, as you gain more experience and you work with the risk manager more and more, you will develop rules for being a bigger trader. But at the start, there really shouldn't be anyone going over. And we won't look at it as a risk issue. We'll look at it as an ethical issue. If we can't trust you to stay within $500, how can we trust you when your stop loss is $150,000 and you're short 100,000 shares of Beyond? How are we possibly, that could go from 150,000 to a $500,000 rip and more pretty quickly. Secondly, the market that we're in right now has so much opportunity. One trade's not worth stopping yourself out for the day, even as illogical as Beyond was at 135, even as you may think Tesla is up here at these levels, and there's a counter to that it's going to 600. Even with the CLVS yesterday, even with this particular stock, there's going to be so many opportunities. You have to keep yourself in the game because there's just a lot of easy trades out there. And so I know that you all want to flex your muscles and get big and take on a lot of risk and think that's the path to making a lot of money. There are a lot of traders in the prop space who don't come anywhere near their intraday loss. I was at dinner with a trader who made, and I'm going to approximate, over the course of 2 days about 300,000, and drew down. He made 300,000 over the course of a couple of days, and drew down. Guess how much? It was his biggest drawdown. He made $300,000, traded a couple of different stocks, mainly in 2 stocks. Guess how much he drew down?
We'll say 30 one time.
Yeah, 30. Okay, and that would be terrific, right? That's still a 1 to 10 ratio. What do you think he drew down? 50 max? 100?
5,000.
$3,000 he drew down. And so, and Swang just had back-to-back $250,000 days and drew down almost nothing. Gave it, had some pull-ins where he gave back some open profit, but there are people that don't need to, that aren't taking pain in this market to make pretty good numbers. And I'm not suggesting that you shouldn't develop a system where you draw down a little bit. I'm just saying it's not true that you need to draw down and make a lot of money. And so, and Dr. Steenbarger said something really interesting to one of our really good traders the other day, which is one of the traders that he works with who made so much money last year, I actually can't even say it because the number is just ridiculous. I mean, the amount of P&L that this particular trader made. He looks at it, this trader looks at it as, and he has risk limits on him as well, he looks at it as a challenge each day. He's so competitive that he views it as a challenge never to get stopped out in a particular trade. He's not going to let it happen. And so for you guys, and he's made the numbers he made are as big a numbers as I've seen. And so those are 3 different ways to look at that's a risk management issue. I think that's, I'm not sure about that.
Yeah.
And the other thing is, at the beginning, what are you really working on? What are you all you guys in here working on? You're working on being consistent. That's, if you can get to the point where you're consistently profitable, it doesn't even matter how small the numbers are. If you can get to the point where you can trade every day, put on your playbook every day, and at the end of the month, your win rate's good, your risk reward is good, your Sharpe ratio is good, you make money, your positive days are way more than your negative days. That is such a powerful position to be in. It's only a matter of time before you're going to be able to turn the knobs up on risk and make more money. And then I'll say one other thing as well, which is at the start, this is the worst you're ever going to be as a trader. This is the worst you're ever going to be today, Max, as a trader. You'll never be worse than you are today. And so if this is the worst you're ever going to be as a trader, okay, why would you risk a lot of money when this is the worst you're going to be? It doesn't make any sense mathematically. You know, save that risk for when you're better. Don't dig yourself into a big hole for when you get good. I can tell you that, you know, I know a trader who was in a hole but kept it manageable. And in one day, because he kept it manageable and had traded poorly for an extended period of time, but in one day, wiped out his hole and made money. So those are reasons to consider for staying away from stuff. And look, I will also say that sometimes crazy stuff happens and we got to deal with it, but it doesn't have to.
So yeah, so we're back here, and reiterating my point is my thought in looking at this was I hoped to be able to get big, and that was a decision I made coming in today and taking this rip on 3 shares. I'm really glad it turned right around, but I was going to be looking to do something like the way it worked out later. Anyway, fast forwarding a little bit, I did see this consolidation, and I was looking for, going back to the title, Big Dog Consolidation Trades, looking for opportunities to short breakdowns. So I just actually passed on this one, waited, I got back down here, and then was just sitting watching most of the day and started using stop orders to enter into some trades when it was breaking below levels that I'd identified, which you can just pretty clearly see here. My real focus on here is how to get big intelligently. So I shorted shares at 761 with a 780 stop. That's a $4, you know, essentially $4 exposure aside from my core position there. Added again after a relatively short.
Look, and you have a lot more experience than almost anyone in the room, and you're transitioning, and you know, when you talk about sim trading, you're really just talking about transitioning from one platform where you're live into another platform where you're going to be live, and that's why you're going through that. And good for you to be thinking about how you can get bigger, but even for you, transition is real. Even experienced trader transitioning from one platform to another, one environment to another, I would be focusing on being consistent as well. So the idea, this is a good example of you developing a thesis, you finding a setup that you like, you seeing confirmation, and you executing on that trade. That is super. If we can do a lot of that in the first couple of months, that would be a terrific goal for you. Yes. And then from there, for us to say, let me really lean on it. I like the intellectual exercise, and I don't mean to cut you off, but we'd be super happy if we were sitting there seeing consistent results, and you were saying to us, I want to make more money, I want to make more money, and we were talking about, from those consistent results, how to do that.
Yeah. An important distinction is I'm using $500 position limits and not an absolute day limit. Yep. And I'm only, you know, if I lose 2 or 3 in a day, I'm done. I'm down $1,500 or something. And that's something that I want to, you know, have a conversation about going forward. But, you know, say this had gone against me, and we'll go and get into that at the end. I was very fortunate in that when I really started to put size on it, just never went against me. And so I added in here, and here. I got up to short and made, you know, the better part of $1 on it, and just started taking, you know, got down near 7, which I identified as an area, and started taking size off and smaller. So a thousand each at 7, 695, and 690, and then at 687 on a market order at the close, and I went home short. With, I think,
go back to that slide. So the one thing you want to check when it breaks out of the big dog consolidation is you want to see volatility of price showing you that the buyers aren't there anymore, and you want to see an increase in volume in that and the initial down move, confirming that the sellers are heavy here,
Yep.
more likely to keep going. So I'd love to see the volume at the bottom of this chart as well, but those are two things to think about.
Yep.
All right, go ahead.
So trade management, I moved this year, as I said. We've walked through this already. The stock did do all this. It moved really close, really quickly. And then after that, I was just looking for consolidation, breakdown opportunities, with the expectation of this stock going out low a day. Again, the 45-for-1 reverse split, some of the very unusual things. I was expecting this to just trend lower all day, and that absolutely impacted how I managed the trade. The stop, I was using hard stops after the first couple minutes. Each time with only about $4 risk. And I brought them down as the stock worked lower. I just, I kept manually moving them down as trailing stops. Going into a little bit more detail on day 2 and 3, so I'd worked down to 3 shares over the day. I can't remember which I came in with. And then the next morning I started to rebuild my position. And this is what I want to talk about right here. Because there was a little bit of volatility at the open, but nothing I was not comfortable with. Then when it broke below the opening low, I added again. It back tested and held the resistance there, formed a nice little wedge. And yet again, I was shorting it again. So I'm getting pretty big. I'm back up to, I think, shares short because I hit this twice with both times I went there. And then I endured this. Again, I never went negative, even with what I had the position on. I went from, I think, up like 1. And this broke above a resistance level and some things. And I didn't have anything in place, what we talked about at the meeting earlier today. And again, I was fortunate it came back. And I literally didn't take anything more off that day.
So the extras that you hit below the lows have a different stop than your swings.
Yes.
So you want to be thinking that way. So I've got a swing trade on that has a stop and a target, and then I'm pushing it, I'm leaning on it. Those have a target and a stop as well that are different.
Right.
And you want to stick to them.
And
And the extras that you added, either you needed to take profits in them, in the money, or be out of them.
yeah, and that's literally the exercise I'm going through and what we talked about this morning. That'll be the next slide. So it ended up working out very well. When I saw this was a high volume push down here, I just took a lot off, and I basically, that basically closed out the trade at the end of the day at around $5. I had a little bit left over that I took it just below 5 the next day. I don't know why it trended down to 350 in just a day or two later, and thinking a stock's down too much is I should have just let it run. But fast forwarding to what we're talking about, I'm searching for a consistent process where I can automate and hopefully have something in place that's more of a script instead of a manual stop. And as we talked this morning, I looked at the 21. So this is the exact same day I talked about. This is the area where I would have gotten in trouble. Here's where I hit it going down, and you can see not well, but there's in the red line is the 21-day moving average. I historically have used a 50-day and a different period, and for the way that I trade, it looks to me like that works a lot better. This is a really volatile stock. I wouldn't have been involved in there, but it stays below it. Big spike down, comes back up, tests it. It wouldn't, and I'd probably use a close. So here's where I'm getting stopped out on these ads from here. Still profitable, but certainly keeps me out of this problem, and that's something I'm going to be exploring.
Now it's your turn. What's the most powerful reason you found in this video to never exceed your stop loss in a trade? Let us know by leaving a comment below right now.